Good morning, everybody. Welcome to the Flow Show, Monday, 18th of August. And a bit of a quiet start to the week, but I don't mind that as I'm just back from a few days off. Before we kick on, just want to make you or remake you aware that if you sign up for our newsletter via that coming soon page, you can see on the screen there, we are still running a draw for a free 25,000 trader funding program assessment account and a free coaching session for August. If you already signed up, then you're automatically in that draw. If you haven't, then get your details in quick for a chance to win one of those prizes and be updated on everything that's going on with trading analytics over the months ahead. We're going full steam with that project at the moment. Morning, Kay. How's it going, mate?
Morning, Ryan. Morning, everybody. It's going all right, mate. Bit short that weekend as usual, but here we are again.
Yep, they're never long enough. Never long enough. Right, well, not too much to talk about. I'm going to get straight into some of the data that we got from last week, particularly coming out of the US. So we had some retail sales numbers, which again showing no real cracks in the economy. Retail sales, headline sales coming in up 0.5%, a little bit of a miss, but still a positive. The control group, that's one of the metrics of core retail sales coming better at 0.5% versus 0.4 expected. So, as I say, yet again, some numbers coming in that's showing that the US consumer remains resilient at the moment. Empire Manufacturing kicked off the new month in that sector, coming in at a healthy 11.9, was expected to go negative at minus 1.2. Within the components, prices paid came down a bit to 54.1 from 56. Employment softened 2 to 4.4 from 9.2. And 6 months expectations came down to 16 versus 24.1 previously. So the manufacturing sector, despite that uptick in the headline number, there's still some components that are looking weak underneath and not much optimism on the horizon either. After that, we got industrial production. That came in soft at minus 0.1%. Manufacturing came in flat, although that was expected to show a loss, so that was a bit better than expected. Pretty much par for the course what we've seen here, not exactly any rocket numbers. It's all coming in the low 0 point this, 0 point that. Capacity utilization, though, that dropped back worse than expected to 77.5. That's not good at all. The Flash Michigan number for August dropped as well and saw a pullback. We'd had seen 2 months of gains after seeing this sentiment collapsing over the months previous, but it pulled back to 58.6. Current conditions also looking worse, and we've seen another pickup in inflation expectations. So we had seen those running very, very hot, which everyone was moaning that, it's just split between the different political parties and who votes for who. Everyone's now ignoring the fact that we've had 4 months of inflation rises in the headline numbers, which was largely predicted by the sentiment numbers before that all started happening. So we've seen softness in the last report or two, but now they're picking up again in those inflation expectations. So never underestimate how this sentiment data can feed into the real data, but still a weaker number there. Then we got business inventories and retail inventories coming in a little bit softer there as well. Business inventories up 0.2. It's been ticking around that number, I think, for the last few months, but no real moves either way in that one. Kay, that US data, retail sales, I mean, it's not exactly gang-busting figures, but still healthy enough.
Yes, that is still good. There was a question flying around whether that would still be it's again, as usual, the market or market analysts always think it's the last good number before it falls off a cliff. But yeah, still holding up. We are now getting those second half numbers starting to roll in. Yeah, I would like to say it's somewhere around okay, and then we'll have to wait and see what's going on, because there seems to be a bit of there are some indicators that may hint at a slowing down consumer, but we haven't seen it yet in the July numbers. Yeah, we know that every month now can be the month that shows either the consumers really hanging in there, or all of a sudden stop going to the shop. By the way, what's his name again? The Fed Barkin. He said, according to his data and credit card spending, that the number would have been okay. So he wasn't far. He wasn't far from the mark.
Yeah, it's always good to get that insight, know what they're looking at anyway. We did have Fed Goolsbee out as well, saying that the latest PPI and CPI inflation data has a note of unease. It says we still need another inflation report to figure out if we're still on the golden path. He then said, let's not overact to 1 month of PPI and CPI and input prices, but it's an area of concern. I think he says that after every data point, every month. Don't overreact to 1 month. He says, if we get a hint for September or later in the fall that we are not in an inflationary spiral, we can cut rates. So it's not looking like September is as done a deal as what the market pricing is saying anyway, according to a Reuters poll. According to economists polled, 67 of 110 say that they are going to cut in September. That's versus 56 out of 105. So we're roughly around 60% of those economists saying that the Fed are going to cut in September. That's versus market pricing of some 85% that we're seeing at the moment. So not got a little bit of disparity there between pricing and at least the economists. Those economists say the Fed are going to cut rates once or twice this year, and that's 68 out of 110. That's versus 69 of 105 previously, so a little bit less in that ratio. Right, the big news really was everyone was maybe waiting for on Friday. I managed to catch it. Was the Trump-Putin summit. No ceasefire of any sort came out of that. They agreed on some things, not on other things. There was a lot of polite talking about the US-Russia relationship, a load of old waffle, really, in the end of the press conference was. The only real thing to take is that talks will continue. There might possibly be another leaders meeting between Trump and Putin. Putin invited Trump to Russia to host the next meeting. We'll see what happens there. We move on to the next stage, which is Zelensky and the coalition of clowns going over to Washington to meet with Trump. Now, really, the super nuts of it all is that the argument's going to be about territory, and that's likely what's going to end this thing. Zelensky wants security guarantees, and that's something that actually Putin offered up, not actual NATO membership, which Trump has ruled out, but they could use what's called the language from an Article 5 of the NATO stuff, which basically will act as a guarantee. And the Article 5 thing basically says if a country acts someone who's in the alliance, then NATO can step in on their behalf. So it's following NATO with actually being part of NATO. That was a concession offered by Putin. But as I say, the rest of it is going to be about who gives up what territory. Basically how much Russia is going to hand back to Ukraine and whether Ukraine are going to settle for that. Half of the reason why the coalition of clowns have gone with Zelensky is probably so that it doesn't all kick off like it did last time when Trump and Vance laid into Zelensky, quite embarrassingly pulled him up. So that's the reason why they've gone there. So this meeting that we've got in Washington today, the result of that is going to be potentially what Zelensky is going to agree to. Trump has repeatedly said over the weekend that Zelensky can end this war right now. Zelensky responded saying that Russia needs to end the war because it started it. So as far as that goes, we've still got this back and forth going on. So yeah, that's where we are in this shindig. That's all going to be happening later on this afternoon. The actual meeting potentially going to start around 5 o'clock UK time and could go on into the evening, this meeting. So we've potentially got some risk headlines to be dropping later on tonight if you're in the UK, late afternoon if you are in the US. Kay, what's your view on where we are with this lot?
Yeah, the thing about the territory, as we all know, that's what it is about now. Is probably going to be a no-go because Putin gives back two small pieces in the north, but he keeps the whole of the east, and even in his demand was even to extend that area just to make sure that he gets enough minerals and rare earth and whatever stuff because right somewhere on the limit of where Russia claims to be now, there's a lot of stuff in the ground. So personally, I don't think that's going to be a flyer. The meeting between Trump and Russia was a failure. Let's give it a name, right? So yes, what is Zelensky and with the support of Europe, what are they planning to or willing to give up? That's going to be still the question now. And in the meantime, yeah, Putin is not really ready to stop anything when for as long as they don't get some sort of an agreement. I don't think there's much more to say now than to wait. Would be a surprise if Zelensky signs a deal that gives Russia so much of a territory. And then the other main question is there today whether there is going to be a Vance thank you session somewhere. Yeah, as you were saying, that was a bit of an embarrassing one. First time they met, but I'm not sure whether he's going to be very present this time.
Yeah, we shall see. I doubt whether the likes of Starmer, Macron, and everyone else sitting alongside Zelensky would stop Trump from having a rant. Anyway, maybe it will lay into all of them. We shall see. So there's really a couple of things that might happen from this. A, we get some sort of positive comments, even if it's that we're a few steps ahead of where we were prior to Friday's summit. That will be a small positive. Not that the market will probably move on that. If we get anything stronger, that's Zelensky's ready to talk about territory, and they're a bit closer together in terms of what he's proposing to take back or whatever. That could be a positive as well. There's also the risk that Zelensky and his EU cronies draw a hard line, and Trump throws his hands up and walks away and says, "All yours. You can get on with it." If that happens, obviously Risky's going to take a beating. So there's still several outcomes that can come from this, or nothing can happen at all. But as traders, we always prepare for what might happen.
There is a risk about Trump having a bad reaction to everything, just because he's so pissed off he couldn't broker a deal straight away.
Yeah, exactly. So yeah, we shall see what those clowns get up to. Right, let's have a look at what's coming up this week. And it's a so-so week as far as data and stuff goes on. Not a lot out today. I've got a bit of data from Canada, but pretty quiet Monday. A lot of Europe is on holiday, even though markets are open over there. A lot of people will be off in various countries. Tomorrow we get Canadian CPI, and we'll see whether they're back on the bandwagon, the same as the US, in seeing CPI tick up a little bit more than that they might like. We get housing starts and permits from the US. Then on Wednesday, a bit of data out of Japan, we get China loan prime rate announcement, and the RBNZ. The RBNZ expected to cut 25 to 3%, which will put them bang in the middle of their neutral range, 2.5 to 3.5%. So really, it's not so much the announcement itself that will be important. It will be whether they then decide to take a more balanced approach, to maybe foot off the gas, look to maybe take a pause and see what happens thereafter. UK inflation data will be a big test for the Bank of England after the last MPC meeting. Inflation is expected to tick up, so the surprise will be if it comes in lower than expected or even lower than last month, but I think that's very doubtful. So again, that will put pressure on expectations for further cuts. PPI data from Germany drops as well as the inflation readings from the Eurozone, which I think they are final numbers. Are they K? I can't remember. I think they're final numbers.
At this point, should be final, no?
Yeah, I think they're finals. So yeah. And now I've mucked up where my calendar is. In the US, not a lot out. We get the FOMC minutes, which may offer us something that we haven't heard 100 times already, though most of them are feet up. But then we get into Thursday, and we start with the PMIs for the new month around the grounds, a bit more manufacturing data from the US, Philly Fed, as well as the PMIs, more housing data. But more importantly, we kick off Jackson's Hole on Thursday, and Powell is due to speak on Friday. That is big appearance. Now, the thing about Jackson's Hole is that all the major press, Bloomberg, CNBC, all them lot, they all set up stands around the venue, so we can tend to get a lot of sideline comments as well as whatever's on the schedule. Which I don't think we've even had out yet, have we, Kay?
What is out yet?
The Jackson Hole schedule and
I have not been back onto the page, so I don't know. I haven't really looked at it. We haven't heard it. Otherwise, I guess we would have had like 150 posts about it on X. But no, I haven't seen it yet, mate.
Yeah, so at least we know that Powell's on the Friday.
Yeah.
And on that,
10 a.m. Eastern time, yeah.
Yeah. And on that Friday, we get Japanese CPI data, UK retail sales, and then a bit of GDP, Canada retail sales. But other than that, it's a fairly quiet end to the week, as I say, apart from what's going on down the hole over there. Anything else you're looking at in particular this week, Kay?
Well, actually, the number that came out a little while ago is that EU trade balance. Is that the first hint about what the impact of tariffs could be? Because we had a pretty big drop in the trade balance surplus there, and June is kind of the first month, if I'm correct, where tariffs were in place. Obviously, we have to see how this goes forward, but that's a pretty big drop. We have also seen that earlier there were, the earlier months we had like a big ramp up of the trade balance, so the positive trade balance, so that all of this could still mean a give back of the front running, but as I've been saying, going forward, the trade balance data will have an importance in the whole bias or fundamental picture that we can see from Euro, or US, etc., etc. But it's an interesting drop, that one, just showing what the impact could be.
Yeah, exactly that. And now we're potentially over the trade tariff hump, although there's obviously more to come. Still, tariffs are back on the agenda, according to Trump. There's his chips, there's his pharma. There's other bum fights to be had as well. But we would hope we might get a bit more balanced trade data to give us a better idea of what's going on. But who knows? Right, so that's that for the week as far as all the data is concerned and what's coming up event-wise. We're still in summer markets, so we're still going to get these moments where there's nothing going on. Prices are just going to pretty much do not a lot at all. So I'm going to have a look at a couple of things, and I'll pass it over to Mr. K-Man. I'm just mainly been keeping an update on some of my trades that's been going on, starting with dollar CAD, which I'm still holding a bit long. We've been knocking around this 138 area. We cannot still hold for any length of time. 138, 138.10. We've got a new secondary level of resistance at 138.20. So even when we did get above 10, still finding sellers coming in. So no real looking like we want to go and test these highs up here once again. It's still looking fairly positive, but we've gone into a pretty tight range over the last, pretty much all month now. So again, summer markets, things are looking a bit quiet. Going to need a bit of a catalyst, I think, to get this one going. Euro sterling, I've been adding bits into my position. I'm not overly encouraged by the price action at the moment. After we had this high, we came down to the 86 level, pulled up just shy. Then we had a bounce, didn't quite get back to that high before tipping out again. And we've made a fresh low just below the 86 figure. This whole area, call it 85, 90s, up to this 86, the 38.2, is still holding. But this bounce is looking particularly weak at the moment. So I think if we break it under 86 properly, 85, 90s, I'm going to maybe reassess my thoughts about sitting in longs. I still like the strategy because I don't think anything good is coming for the UK, but the price is going to be my guide. I don't want to be building up too much of a position that goes offside, so I may have to re-evaluate it. Fortunately, I've been keeping the position small, so it's not going to be damaging at all, and I'm still happy to buy it lower. If we're getting below 85, though, that will probably be where I look to throw the towel in. But for now, technically, on the longer term, this June or May bounce is still holding up well because we're holding that 38.2. But shorter term, it's not looking as healthy. But if we continue to hold this 86 level, then at the very least, I would expect us to perhaps go a bit sideways and confirm the range between the 87.50s, 60s, and the 86 level on that one. My dollar MEX, still both sides in this one. Again, though, it's looking okay. I'll leave it on the 4 hour. We've had this bounce again from near 1850, so that's encouraging for my longs. But again, it doesn't look like we want to be busting higher anytime soon. We've got a little bit of positivity here that we've broken back above 1869 and holding it as support. But we're into this traffic area again, 82s, 85s, and that's where we're sticking at the moment. So the main thing to take from this, and since the move from 21s, this is the best supporting picture we've seen in all that move, but we're still not out of the woods in terms of that 1850. For me, the range 1850, 19, that's your bigger levels that you need to be watching. If we're moving either way outside of those, then we're probably going to see a sustained move in that direction. Otherwise, again, I think we could just be ranging a bit for want of anything else to tip us one way or another. So I've been a bit dynamic with my longs. At least I got rid of all my higher levels that I entered, 79, 70s, just to clear them off the decks, and a bit of my 50s that I got in from down here. For my shorts, the 19 level is my important level. If we're busting through that, then I'll fold off the rest of my shorts and keep the longs and see where they want to go from that point. Aussie Kiwis, another one I'm looking at. Still interested. Oh, let's get into that one. Still interested in trading these wider ranges up to here, the 112s, in part of the bigger. Well, I'll go into that one. The bigger, wider consolidation phase that we've been in for coming up to nearly 11 years now. We've been in this sideways action, so I'm still looking to try what I did at the latter part of last year getting in shorts against some of these levels. But I am conceding that it does still look short-term bullish, particularly while we're above this 109s. And with the RBNZ, I can see us pushing into 110 if perhaps they step into a more neutral setting in terms of rates. But if they remain, if they go into a neutral setting, I can see a dip coming in this, and I'll see that being bought up pretty quickly because this is still looking fairly bullish. If they do move, or if they do keep dovish, then we're going to be probably pushing into that 110s and nudging up. So there's a bit for everyone in this one. If you want to play it short term, I think the dip might be something that's worth buying. If you're longer term like me, then I'm going to look to be building the shorts if we get up into those 110s. Right, Kate, I'm going to punch it over to you nice and early. No point having a long show on a Monday. If I can remember how to do it. There we go.
Well, the rangers are not telling us that we should be doing an hour-long show. As we already said, ranges on the euro, and we are still, let's say, inside this 116, 117 and a half. You can add now like 116 and a half, 116.60, 117.15. That's your kind of your inside range, but we had this hopium building that something may have come out of the meeting where the euro was quite well supported. Also on the crosser side of things, the euro was well supported, but now we are giving it mostly back, and we are coming back to somewhere where we were before. These are well trodden ranges. We really need to get out of this box really now to start going again. Will it be on the back of those meetings? I don't think we have to keep our hopes up too high. It would be some kind of a surprise that there is a real agreement coming out of, or at least a full consensus between the US and the EU, Europe in the wider sense of the word, NATO and Ukraine. If there's a real consensus coming out of there, it would be a little bit of surprise, which then in turn may see the euro get some more support again. Because remember what we spoke about when if Trump manages to broker a deal, yes, it would be positive for the euro, but at the same time, if you look at other currencies, it may end up being more positive for euro crosses, where also the dollar may have found some attraction. But for the time being, we are still pretty much where we were before Friday, I would say. But let's keep our hopes up and see if we can break anywhere 116 and a half below or above that 117.15, and then we would go back into this zone here, 117 and a half, 117.80. That would be the next little bit of resistance, and on the downside, 116 the figure, obviously. Cable, yeah, just Bran. Bran, it's very rangy, right? We are in between that 135.20, 135.90. That's your range to observe at the start of this week. You can add 134.90 on there to the downside, but still want to remind people about this 135.90. It is really the gateway to go and have a look at 136 and a half. Okay, so this really is a pretty interesting top. So whenever we get back above there and hold, that could be your push then to higher levels. To the downside, we are going to find levels every 30-40 pips. 34 and a half, 34.60 will already be a support again. Before the bigger one, which is not before 133.60 really, there is going to be this one additional interesting one, is the low 134s. We've had this is the last time we really had a decent correction before shooting up to 135.90. So that's a level that we should make a note of as well at the start of this week. Ryan already, did you show the Aussie dollar? No, I mean, but it's
No,
really not worth having a look at because we're still turning around at 65. Kiwis may be just that tad more interesting because, as Ryan already said, we are going into the RBNZ. What is global um, the global feeling right now or mood right now is that antipodians are still underwhelming compared to what the euro may have done, compared to what even sterling may do at some point. They're still a bit underwhelming, so they are going to need some positive news to filter through into the currencies, into the currency market. We've seen equity markets doing pretty well, but into the currency market, it has not really filtered really through yet, and that's where antipodians would usually pick up again. But they are, as we can see here, and if you compare it to the euro dollar picture as well, they are still lagging, even versus the sterling. So we need to pay a little bit of attention to 59, the figure 5 here on the Kiwi, and then again 59, 65, 70 before we can talk about 60, the figure. And as we have seen last week, we had a look again at 60, the figure, and again we couldn't keep up there, and it is really, it's really going to need to give way for us, stuff like the Kiwi to really go. And the Aussie is roughly painting the same picture, and unsurprisingly, maybe that little tad better bit still, but we are still struggling with the 65 and a half, then the 65.65 where the 23.6 came in, and I think it's one of those levels here as well. Oh, I thought there was a fib here at 65.65 from this move as well. But anyway, and the downside, yeah, still below 65, we still find buyers. So we are really trapped for as long as we are not breaking those lower levels here. Um, it's really not a picture that pushes me to have too many positions to start the week. Um, and what Ali was saying about euro waiting for a catalyst, yeah, obviously it is. But I've been talking about this potential range forming, and it seems that we are still very much in it. And the same could be said of gold, and gold could not pick a side, even though there was some disappointment on the meeting not finding any resolution that we pushed a little bit higher. But we're still in the middle of that range as well. Even the 33 and a quarter, 33 three quarters is not giving way right now. We really need to see pushing through levels to really get more um, and bigger moves. That low 33s, which I was highlighting before as well, still left untested. Same thing right now for the 33.70-75, which is again building up as being a level. So still, for as long as we are in between there, I'm going to be extremely uninterested in really trying to pick a side. Um, it's not a market unless we get news from the political side. I guess we are in a range here. Same thing for silver as well. It's looking still positive. I've put that bigger channel onto the longer time frame because we are like going up and down through it, so not looking at it for the shorter term anymore. But I mean, this is a market which is not really decided to pick a side. So whatever you want to do, anywhere between 37.70 and 38.80 is probably going to be the boundaries of what's going to be traded at the start of the week. Is there anything else, guys, you want to look at? Because really, there's not a lot going on in this market. One I'm keeping an eye on right now. I'm starting to think that looking at also what's happening in Brent, etc. It's possible that we are building some kind of a bottom in oil, although I'm not a bull by any means, but it's also and I'm not a seasonal trader either, but the seasonals say that we are entering a period where the Noki could be relatively interesting and that is looking here. I'd be looking at starting to build maybe into a bit of a short, ideally even go above here, back to that 1030, and then trying perhaps to look if the short side could start to be interesting, because this zone here looks to me to be big enough to perhaps for the medium term starting to look for a bit lower. Therefore, for that to happen, though, we need to break below this support around 1015 and then add 1014 to it, and even 1011. But if we start to get back below there, I think this party may be over and we are looking for a bit lower. But it's still in the very, very early stages of what I am really trying to do. Euro Swiss, dollar Swiss, really dollar Swiss. I told you it's an extremely frustrating currency pair. Even Euro Swiss as well. We went for the retest of that 94, 46, 47, and we are already coming back. We are not really dropping away, but that is your usual risk. We were building up a bit of hopium there, see if something could come out of the meetings. It could still not be too late for it to push higher, but respect that level 40, 45. For as long as we don't break above, it could still be that we are back into this lackluster zone. And yes, you have a bit to play with if you want to be short and against that level. But it's not pushing me to have a position. And then dollar Swiss is even worse for me. This thing is really not going anywhere. Any decent move to any direction is getting countered, and we are back around 80, 70, 80, 60, really in the middle of whatever's been traded over the past 2 months now, really. I really, no, I really don't see anything longer lasting than a few hours in this market. You may say that if we get back above 81, yeah, okay, you may push to 81 and 3/4. But if you're a day trader, that could be enough, of course. But for the more medium term, 80, low 80s, and then that 81, that higher 81 here, it needs to break below or above that one to really get going again. And with that, Ryan, back over to you, mate.
Thank you very much, mate. Good stuff as always. Thank you for holding the fort as well last week. We got you set up for the week ahead, traders. So have a good one. Take care, and we'll see you all tomorrow. Have a good one.